Hi, everyone. Good to see, like Arjun said earlier, there's still a few people standing, given that we are, I think, in the last hour of 4 days of this Fintech Surge event. Um, my name is Biswajit Dasgupta. I'm the Chief Investment Officer of Asas Capital, which is an external asset manager in the IFC. I'm also involved in the fintech world in a variety of ways, including advising a couple of fintechs on running the business as well as with fundraising. Today's discussion, as all of you know, is around embedded lending and lending responsibly, particularly in the context of emerging economies. I have the pleasure of having with me two people from two organizations that are deeply involved in this space. I will let them introduce themselves and then we take it from there. Sebnem, you want to go?
Hi everyone, pleasure to be here. My name is Sebnem Erener. I'm a managing legal counsel at Klarna. I'm also Klarna's, part of Klarna's policy and government affairs team. Should I introduce Klarna a little bit also?
Oh, absolutely, please do.
For those who don't know anything about Klarna.
I'm sure everybody knows Klarna, but still, I mean, why not?
Let's not assume, but I hope. Klarna is a Swedish European bank, fintech, but the line is blurred nowadays. It's a leading global payments network, Europe's first AI-powered bank, and also an AI-powered shopping assistant.
Thank you.
Thank you.
Yeah.
My name is Ibtissam. I'm the co-founder and CPO at Cashew Payment, which is a fintech in the UAE operating in the point-of-sale lending as well as the buy now, pay later space.
Thank you. So what I thought we would do was to sort of dive into the responsible lending aspect of this. And to start that off, maybe the question that needs to kick things off is what exactly is the problem statement here? What is it that BNPL is looking to solve? And I mean, all these questions are open to both of you, so please.
Sure. Well, I feel like the first point or the first problem statement that buy now pay later is trying to solve is access to point of sale access to finance at the point of sale when the customer needs it the most, right? So it's not a permitted application with the bank or so on and so forth, but it's actually when I'm there at the point of sale trying to purchase a good or buy a service, buy now pay later is there embedded in my checkout journey.
Anything to add?
I mean, buy now, pay later is actually not new. It's just an improved version of what has started in 1930s and then developed in 1980s. So it was like during Great Depression when, layaway type of like financing options were provided in US. So you could purchase an item, pay in installments, and then you get access to your item. But I mean, it wasn't instant, right? And then in the 80s, it was the credit cards. We became a bit more impatient. We want instant gratification, but it comes with a cost of extremely high interest rates, fixed like credit limits, etc. So what buy now, pay later is trying to achieve is to foster the benefits of these two options and limit the risk for consumers in a way that it's interest-free, it's short-term, the debt doesn't accumulate, it's not revolving, but in the end, it's credit, and we know what credit is. It's money that's not yours. So we still promote like people should still use money they have, but it's also important to have flexibility, especially in the digital economy. So buy now, pay later offers a more fair, less costly option compared to existing like credit cards and other options banks offered so far.
So I've had a credit card for, I don't know, 30 something years. And I've not paid 1 dirham in interest.
You didn't have?
Even 1 cent of interest I've paid in the last 30 years. And I've used, I don't know,
it's
hundreds of thousand dirhams.
It's because you paid
Correct.
off. But the banks are fine also if you only pay the minimum amount.
Correct.
Yeah, and then it will revolve, and then interest starts.
You are the exception to the rule.
Huh?
You are the exception to the rule.
No, so the point I'm trying to make is, is the business model derived around people being irresponsible with their financing? Are people who are financially disciplined, who make sure that they make the payment for whatever it is they bought, not your customers really. And only people who want to borrow, whether through credit card or through BNPL, really are your customers. Is that fair to say?
It can be used in different ways. That's why we're discussing now the responsible way of doing it. But our business model, for example, it's not relying on revenue from customers. It's a merchant fee, basically, that we're focusing on. So when customers miss payments, we lose money. And also, like with Klarna, for example, if you miss a single payment, your entire access to our service is blocked. So there's no way of accumulating that. So and there are like other measures from.
So when a bank gives me a credit card, it does a certain amount of credit checks on me, right? It sets my limit based on my income or my wealth or whatever it is. It also is subject to central bank regulations in terms of debt burden ratio and so on to ensure that I do not overspend. So there's a certain amount of discipline that is almost thrust upon me to make sure that I don't go overboard. The same doesn't apply when it looks at when BNPL is used. So can we really say that we are encouraging responsible behavior here?
How come? How do you assume that the same doesn't happen? It's not possible to extend credit without doing any sort of assessment, right?
Exactly.
Like we do real-time credit assessment, not just like when you apply for a credit card, they do one assessment and that's what your limit is based on. We do real-time assessments based on factors that change, and we also adjust the spending limit on a daily basis. So if we sense anything that indicates any irresponsible behavior or any sort of difficulty paying, your limit goes down. So it's really possible. That's what we're talking about. Innovation and technology has huge role in providing win-win-win solutions. It's protecting and informing customers. It's good for merchants. It makes frictionless, seamless checkouts possible. But it's good for us also because we're bridging that.
And I totally disagree because there's a lot of consumers, for example, that have multiple credit cards. I feel that's very irresponsible. And a lot of the credit cards being given to users or to consumers based on their income at that specific period of time, but then they've been additional credit as they go by, but those credit card limits, they never went down. They just keep increasing, actually. So I feel like it's not a great comparison. And when it comes to credit checks, we do credit checks too, right? Recently, the UAE has announced their buy now, pay later regulation, SAMA as well, a couple of years ago. So we do calculate the debt-burden ratio about consumers and when we offer them credit. And exactly as she said, that changes. Actually, every month we do look at, again, their credit score, their patterns, their spending behavior. So actually, I feel like it's more responsible than a credit card line.
Right.
I can also add that you're right in the sense that there was a loophole until recently because like interest-free short-term type of credits were not regulated. So in EU, it didn't fall under the scope of Consumer Credit Directive. We didn't wait for regulations because really we found a way that serves us, like both consumers and us. But now it's actually captured. I understand in this region also, but in the EU with the new Consumer Credit Directive, buy now, pay later is also within the scope. So credit worthiness assessments, pre-contractual information, all the rules around marketing applies to buy now, pay later also. But previously, I agree, there was a loophole, and that's why BNPL offerings were not consistent. That's why that question was even more important. Consumers really needed to be careful about what providers they use.
But also it's very important to note that the limit for a buy now, pay later transaction or the amount is very low. Even before the new regulation, right, it was like $100, even less than $100,
so
right?
I'll come to that in a second. But before that, this is very useful, actually. So I'm assuming now, particularly with the advent of technology, you are actually able to do better on-the-spot credit assessment than before with things like AI and all that? Will that Will that help?
Not really AI yet, because I mean, when we say AI, the definition is still not like perfectly clear, but it involves some sort of autonomy. So no, it's a high-risk use case for AI, but very advanced data models and some form of machine learning is applied, yes, of course. But using AI, and what do we mean by AI, like generative AI, etc.
Right.
For creditworthiness assessments, I would take a cautious and gradual approach to that. And also under the AI Act that's being discussed in EU, that's considered a high-risk use case, and it will be highly regulated. So, no, we're not doing that, but our data models are extremely
So what sort of
advanced.
inputs go into your credit analysis? What would you look at? What would you look at?
I mean,
I'm just
various
trying
factors that affect. I mean, it's. I mean, those are our underwriting policies. You can't.
No, of course.
You can't be asking me
I
about
agree.
those things
But
on the
I'm just
stage.
trying to understand.
And
what
it's
sort
also
of information
market
would you
specific.
need? What sort of information would you need to form a credit opinion on a person? What sort of information would go in there?
I mean, anything
Buying
that
behavior,
indicates
what is-
exactly anything that
what from the
indicates like financial.
But do you have
behavior.
visibility of his income, his or her?
Of course, it's explainable. It has to be explainable.
No, for sure. For example, here, let's look at the data that we look at, right? We're very early stage. Of course, Klarna been around for 14, 15 years. We're only a 3 years old company, but we're utilizing now open banking data, right? We integrate with open banking companies, and we get access to spending patterns and spending behavior of consumer over the past 6 months, for example. That can tell you a lot about that consumer, how much credit that they're getting from, like, for example, their income. You start always from income, salary, right? So how much they're making as a salary.
Those
and
kind
then
of things are available with credit cards also, right?
of course, they're available credit card, but they're not. It stops to a certain parameters. Let's say maybe, for example, 5 to 10 parameters that banks look at today, but startups and fintechs can look at hundreds in a matter of few split seconds, right? Because they have the infrastructure to do so. Incumbent bank, like, they don't, or they do not want to at this moment in time, but startups do, because it will help them make better decisions, collect more data, and then when it's time to use AI, you have that data already stored on your database that you can utilize to predict future behavior and build more language models.
I would say I also, like, it wouldn't be wise to jump into that before you make sure that the data models you build are accurate and also eliminate bias already. That's the goal for us, and we have achieved that level of accuracy and also eliminating bias compared to human decisioning. So that's the first step. Like, if your data model doesn't have that, then you can't really like
utilize it. Yeah, it has to be ethical, right? I think we're early stages in that. It's still very, very early, right? So you cannot rely fully on those models. You need human interaction, and you need somebody to look at the performance of that specific language model so that they can make adjustments. And it just is not just in lending or for fintechs, but across many industries. So very, very early stage, and would be inaccurate to rely just on them.
So obviously the BNPL is not doing the lending, right? The lending is being financed by the merchant, right? You guys are not lending out of your own balance sheet. The merchant is extending the credit to the buyer. I'm assuming that's really how it works.
No, not necessarily. It's actually, when it comes to Klarna, I think it's directly from their balance sheet. Because in
That's
Sweden,
because they have a banking license now.
Yes, they have a banking license.
But if you don't have a banking license,
for example, when it comes to Cashew, we partner with banks. So, for example, Mashreq Bank is our balance sheet provider here in the UAE, and other countries.
So they lend to the balance sheet.
They lend to their balance sheet, but it's never the merchant, because if it's the merchant, then you are just a technology provider at the point of sale. And there are a few companies like that, but we don't know about them because they're B2B and they don't really advertise their technology. But usually, the merchant never wants to take responsibility for the balance sheet or lending, because they're not a lender. They're an e-commerce.
In fact, I was going to sort of discuss the sustainability of that, particularly when interest rates have gone to where they have, and they're likely headed up, right? In an environment like this, the cost of financing this credit becomes so much higher that it's very difficult for merchants or even borrowers to sustain, you know?
But I think what you explained is part of embedded lending.
Right.
And there are also those solutions.
Right. Right.
So, yeah.
So I mean, what I'm driving towards is, as the cost of finance or cash goes up, does it have an impact on the growth of consumer credit in general? Do people continue to borrow? I assume not, because now they have to pay more for the credit, right? And then what does that do to the business model of a BNPL?
I mean, it doesn't affect because it's still interest-free. So in that sense, it doesn't really affect. But,
No, so
I mean, their purchasing
where is the
power
BNPL
is
making the
affected.
money?
Huh?
Where is the organization making money from? What is the revenue model?
I mean, as I said, it's like we provide a whole suite of payment solutions.
No, I
And
know. But where Klarna, or as Cashew, where do you make your money from?
The main revenue stream is from the merchant partners. So obviously there is a merchant discount rate. That's the number one.
But that's what I mean.
And then,
That's
and
what I
then,
mean, yeah.
and then, as you clearly stated,
Right.
of course, the cost of fund now is increased and it keeps increasing. That's why we see a lot of startups struggling, fintechs, and let's be honest, that's what's happening. And that's why you have to think about other revenue streams. And like she said, they have different payment options. Like they have the pay now and so forth. There's all of that. But then Klarna recently introduced the AI shopping experience. So they're going above and beyond just lending. It's becoming e-commerce experience.
Yes, that's what it feels like.
Exactly.
Yeah,
And
yeah,
for
yeah,
example,
yeah.
for us, for sure, it's lending. We have the bank partners, so we get preferential rates when it comes to the actual balance sheet. But we are also thinking, okay, how can we differentiate and what's next for buy now, pay later? Because some might say buy now, pay later is just a feature. It cannot be the whole
Yes.
business. So, and we understand that, and
yeah,
we see that
yeah.
Klarna understand. Maybe she
Yeah,
can say a little bit more about their e-commerce.
yeah, exactly. Like we work as brand partners with our merchants also. So that's the biggest benefit, especially to smaller merchants, for example. Like
Right.
they benefit from our consumer base and also the Klarna trusted like brand. So then we work on actual projects on those.
Exactly. Yeah, I would call that, for example, referral. So there is a lot of merchant partners that will pay a fee to be listed on your mobile application, to be suggested as a partner, as a we show their discount code, coupon code, and you can generate a lot of revenue, especially for bigger companies like Klarna or a firm that have a big user base, like 3-4 million active users, or I'm not sure the total number for Klarna, but then that's a great revenue generating model as well, referrals. So there is a lot of small revenue streams that
Right.
you can come up with once you have that big user base. For us, it's slightly, we're too early. We're not there yet. We do have referrals. We have merchant partners paying us to be showcased on our mobile application, but it's only going to grow and grow even more, and may see it for other players in the market. So I think there are other ways to generate revenue when you have the user base, when you've created that loyal following, like Klarna, for example, did in the US and in Europe.
Right. Right.
And one important benefit to merchants is easy and quick integration of our checkout solution. For example, we have all the partnerships with all global PSPs, payment service providers. So then it's a very quick integration for merchants. So that's what they pay for.
You mentioned small ticket purchases. Is that more or less standard, or is that the product, as in you only finance small ticket purchases, or would you finance, I don't know, a car?
Sure. So yeah, we started obviously with small purchases, which is mainly retail, right? So when you're buying a sneakers or a Nike shoes or a T-shirt, so obviously that's what in dirhams could be 300, 400 dirhams. That was the average ticket size. But then we realized in the Middle East or in the UAE and GCC in general, we need to adopt a different business model compared to the Western world, because in the Western world, Klarna or Afterpay or Affirm are going mainly after Gen Z and younger generation, right? When in the Middle East here, the population that is expat is mainly the millennials, like slightly older. So they will not use a buy now, pay later product to buy a sneaker, a pair of shoes or a T-shirt. They would use it for other services, like for example, paying the tuition fees for their kids, or the nursery fees for their kids, or medical treatments that are not part of your insurance policy. So as we grew, and then especially last year, we got approached by merchants in the likes of clinics or hospitals. Like, for example, Med Clinic is one of our partner, and there the ticket size has to be bigger because, for example, if the fertility clinic treatment is about 25,000 dirhams. So that's when consumer need the service, and that's what we did. We started servicing those type of users and consumers, and we increased our average ticket size, and now goes up to 50,000 dirhams. But we're able to do that because we have a bank partner that offers balance sheet. It's going to be very challenging for all the buy now pay later companies. And also, when you're offering a transaction that covers 50,000 as a limit, you cannot do it in pay in 3 months. If someone can afford to do it in 3 months, then they will just pay upfront.
Then you don't need BNPL.
Exactly. So we offer now pay in 6 and pay in 12. And that's compliant actually with the new regulation that is allowing that to do so. And we feel that there we're adding value. And then when you do that, there is nothing wrong with charging interest or with charging a processing fee because you're providing a service that is needed. So there we see a business case, and that's where we are executing.
And how do those lending rates compare to what's available in the market?
At this moment in time, it's very low for us because we're just testing the waters. We're just offering a processing fee, which is a flat processing fee of 150 dirhams, which I believe is very competitive. But the regulation that came out just last week allows us to charge the consumers up to 30% of the total loan amount.
So more or less like what credit cards charge now?
Exactly. So, but not just as one fee, total fees, like late payment fee, rescheduling, and all of that. So, but we feel like if we want to be competitive and stay ahead and not become like all the other banks' product offerings, so definitely we'll not get to the 30%. We'll keep it below that. And it's going to be a war between a buy now, pay later companies or who has the best rate, I believe.
So tell me, somebody who buys a 400 dirham sneaker and doesn't settle, what are you going to do? You're going to go after him with a lawyer?
That's what we're doing right now. So it was a little bit harder at the beginning because it was not regulated and we were not integrating with the ACB. So we were not reporting back to ACB. So all you can do is just keep calling, maybe send it back to a collection agency, post whatever, 90 days DBD,
you
whatever.
Send somebody to break his legs? No.
No, we don't. So it's the responsibility of the collection agency. But today, we're actually reporting back to ACB, which is a lot for us as a startup. We have a very small team, so have to do that on a weekly basis. It's a big pain for us, but it's actually playing a lot with the user mindset that, oh, okay, if I don't pay this, there is repercussion for me in the future to get my car loan or to get my home mortgage or whatever. It's going to affect the user credit score. So I feel like the users now are understanding that this is an actual loan. This is an actual credit that is booked based on whatever your credit score and all of that. So as of now, the default rate is actually pretty low because the acceptance rate is low, at least for us. So it's a win-win for us. Obviously, we cannot grow as fast as our competitors do or whatever because they don't report back yet, they don't do credit score checks yet. We're the first one doing that here. But we are thinking long term and we've actually been advised by our bank partners to do so. So we see a good reasoning for that.
I'm also thinking about the demographic mix of this place, right? I mean, if the economy goes pear-shaped, people take the flight out.
For sure.
How do you
and it happened. So for example, that's why we're very strict on lending to, for example, high-risk industries such as electronics. Because anyone buy a phone that's going, it happens. It happens. So there isn't really ways to go after this user post dispersal, but that's when you start using technology and other features or credit score and all of that to predict the likelihood of that consumer running away, for example.
It's also a misconception. It sounds like it's the younger generation, Gen Z, using buy now, pay later, but when you look at the data, demographically, it's actually equally distributed, at least for us. So it's actually not the younger generation who uses buy now, pay later more.
Right.
And
Interesting.
pay now is the most popular payment method.
So
for
what
us.
is the demographic? This is interesting. So which
sorry, guys, we got-
cohort is the biggest user of
It's
BNPL?
equally distributed, actually,
is?
across age groups. Like, it's quite evenly distributed, which is not intuitive, I know, but that's the data.
Interesting. I know now Klarna has sort of segregated its lending into, no lending and small amount lending, and I don't know what it's called, but
Term
something
loan,
with
you mean
bigger
interest-bearing?
tickets as well.
It's very small for us. It's like a few percent, like 1 or 2%. Like it's
That's the term
most,
loan part.
exactly. For us, it's mostly pay now. People like we don't only offer buy now, pay later. It's a whole
Yes.
suite of payment methods.
Pay now,
so
yes.
pay now actually is the most popular. So they use us for the shopping experience, for the app, because they trust and just the flexibility and just having everything in one place. And because of our partnerships with different
So
payment
what is the
service
value
providers.
proposition in pay now? Then exactly what is it that the customer is getting?
So sorry, guys. We are going to have
Are you up?
to leave it there. We're out
All
of
right.
time. There is just
Good.
one sort of general question I'd quite like to ask the both of you, though. We've heard a lot about AI over the last 3-4 days. I just wonder, the last year of ChatGPT, how much has that changed the game in terms of how your businesses are thinking about the role of technology in reaching customers, distribution, or improving efficiencies at the back end? Sebnem, start with you and then Ibtissam.
Yeah, I mean, we're the first bank in the world using ChatGPT Enterprise, actually. So in terms of productivity, in terms of reskilling and reducing cost and creating value for customers, we're seeing a lot of benefits. But as I said before, we didn't start from the high-risk use cases. So like customer service, we've been extremely focused on customer service from the beginning. That's one of the reasons also why customers prefer, because they have 24/7 very close engagement. So AI, generative AI is very helpful for us in that case. And then also internally, we are really we're 3,000 employees with access to OpenAI Playground, and it's like constantly monitored by our management, like who's actually actively using. We are expected to reskill and work more efficiently. So we're on that kind of a journey.
I think the use of AI is mainly around, when it comes to internal within the organization, is around saving time with the mundane tasks that the employees have to conduct, right? And I think one of them, as she mentioned, is around customer support or customer service. Like we have a lot of chatbots that they can answer quickly with the mundane questions that arise. And I think it's very important also in the product development and actual tech, right? The co-pilot for engineers, whenever they have a bug and they're stuck, instead of spending like hours trying to figure out where is that bug and how can I fix it, they just reach out to like ChatGPT and can help them highlight where the bug is and all of that. So, but obviously still early stages. I think we've been testing around also when it comes to UI UX. Figma has a lot of plugins that are enabled by AI that can help you do wireframing, testing, user testing, and all of that. And we see it, and I think it's just the beginning, and it's going to keep growing and growing, and helping us, save time, obviously, being more effective and more reliant.
Thank you very much, guys. Please give a warm thanks to our panel.
Thank you, guys. Thank you.
Thank you.
We've been hearing a lot about partnerships over the last 3-4 days. We're going to continue a little bit on that theme and a look next in the next session in 1 minute at how fashion is thinking about technology and some of the intersection between fashion, technology, and brand, which hopefully for those of you that are innovators in the room gives you a sense of where some of the opportunities now and in the future might be as those convergences continue, both between real world fashion, but also stuff that's happening in Web3 and some of the more digital experiences. So please join us back in 1 minute for our next session. Thank you very much.